Time for another stock review. This time we're talking biopharmaceuticals, always extremely risky. Now, is this one Longeveron or is it Longeveron? I don't know. Perhaps you could tell me in the comments. In this review, if you might like to tap the like button if you like this sort of thing, or not, either way, or consider subscribing to my channel, because in this review, you're going to get a full in-depth review. Remember, I don't own the stock. I'm just here to present the facts to you so you can decide what to do. We're going to look at the numbers, the financials. Here you can see all of the numbers, the ins, the outs, who's buying, who's selling. We'll look at the balance sheet, the state of their earnings, their margins, who's buying on the inside, who's selling on the inside. What's their solvency score looking like? Profitability score. We'll take a look at the latest news, what the business is up to. We'll also have a look at their website and get a feel around the business, what it's all about. We'll also do a back test comparing it to the S&P. We'll look at the latest ratings, the latest news, and of course, we'll look at the chart as well. All of that is coming up in this review. Can you believe it? All live, happening in one review. And just because we can, we'll do a little bit of this because it's biopharmaceuticals. Yep, Members Week. We're in the laboratory. We're taking a look. And the question we all want to know is, can you make money from this stock? Can we turn the money printer on and see how it all works? Well, let's see. We'll scratch our chin, yep, and we'll go over the numbers and we'll come to a conclusion whether this is the stock for us. Remember, I don't own the stock, I only own the S&P, so I'm not pumping and dumping it, but I very often rank number one in the world, well, for nearly all the stocks. I even rank number one now every other day for Nvidia, the biggest stock in the world. You don't have to be the biggest YouTuber in the world to rank number one. You just have to work harder than anyone else and provide content that people want to watch. I guess people want to watch it, so I'll keep making it because I love it. Right, let's get straight into it. What is this company? Now, we're going to go for Longeveron. It might be Longeveron, but we're going to go Longeveron because I'm from Europe and we like to be posh, even though we're not, but we pretend we are. Right, okay, let's look at the line chart. It doesn't look good, does it? It IPO'd here back in February the 12th, 2021. It dropped off, which it didn't even have a pump on the IPO. That's very disappointing for the company. Went along for a while, had a huge pop here. Now, with a biopharmaceutical stock, biotechnologies, extremely risky, very expensive to run, a lot of risk involved, medical trials, things can go wrong, whatever, and a stock can break if it get, sort of breakthrough a medical research, and then if it goes wrong, it all can collapse. So the first thing that you want to do is go back and check their history on their website. You can go back through the investor pages and see what caused this. I haven't got time to go through every detail today, but what caused this, and then what brought it down, and then see if we can look for that event again. If I was going to be buying this, I would want to know what happened there and then what happened there and see if it can happen again. We had a little pop later on in 22, but essentially we're just trending down consistently, really. Let's go and look at the year to date. Yep, nothing exciting here. A few maybe trading positions, but very, very difficult on this kind of stock. Let's look and read more about it. Longeveron, we're going for that, right? It's a clinical stage biotechnology company which engages in the development of cellular therapies for specific aging. We talked about that earlier. Aging related. Oh, we need some of this. We need some of this. I don't care. I'll buy it. And related threatening conditions. Its lead product, which is LOMECEL, LOMECEL-B, is a cell-based therapy product which is derived from culture expanded medicinal signaling cells that are sourced from bone marrow of young, healthy adult donors. That wouldn't be me then, would it? Anyway, the company was founded by Joshua M. Hare. A lot of names here. Is it Hare? Could be either. And Donald M. Soffer. This is very complicated. On October the 9th, 2014. So they were around for a while before they IPO'd. and is headquartered in Miami, Florida. The listed name is LGVN, Longeveron. We're going to go for that. Florida, and employees 25, very small company. If you were buying this on margin, it's regarded as a maximum amount of risk. 100%, 25 is the lowest. Average volume 989, 1818 today. It's the opening bell, of course, early in the morning. So very low volume here. You can get stuck in a stock like this. Oh, thank you, Rune, for your subscription. Appreciate that a lot. 52-week low, 77 cents. 52-week high, $35. So obviously lots of volatility, trending down. All right, okay. There's a little bit. We'll come to the hedge funders and who's buying and selling in a moment. Let's have a quick look at the earnings over time. They've just reported, and a massive loss again, as you can see. If you look at their earnings, Wall Street expect them to do better, and they keep missing. They beat in Q1 of 24, however. That was nice. That was unusual. And they were trending up. But now Q2 24, a massive miss and back down again. So that's a bit worrying. Estimated 105 and actually did 183 down. So we're losing money. Who else is buying the stock? It gives us an idea of how the stock might trend. Lucid. Awful company run by Peter Rawlinson, who robs the company, takes $500 million of wages when the company's worth nothing, taking it private. That's a worry. Mullen, worst stock in the world, the biggest scam stock in history. Terrible, terrible, terrible company. This tells me straight away we are involved here with some very volatile gamblers who will pump and dump and short the stock crazy. So straight away, I'm out. I want nothing to do with it if it's got this company. Absolutely not. I don't care how good it is. So straight away, I'm on a negative, but we'll see. We'll carry on going. Let's have a look at the insider buying. We were just talking about the hedge funders, who's buying whatever. We've got hedge funds. We're buying in Q1, sold in Q2. Obviously, they sold maybe just before the earnings. I don't know. Let's have a look. We can open up the details and see who just sold. Gamco, just one. Gamco investors closed their position. It wasn't a huge position, was it? Just 3,250 shares. Wasn't a huge position anyway, to be fair. But sold off. What about insiders? What are they doing? Well, that's a different story. Much, much better. Insiders seem to be... Oh, Dylan Wilson.
Dylan Wilson has become a member.
Excellent stuff. There we go. Dylan Wilson, you're already a member. Are you just celebrating your membership? Anyway, what have we got here? So we've got an uninformative buy. Now, what does this mean? The secretary, director, the CFO, any CEO? Is the CEO popping up? Yep, the CEO's popped up there as well. These are uninformative buys. This is not, what's this here? That's interesting. Just got an interesting comment there. Just come up. Beg your pardon. What we're seeing here, disposal of shares via grant or reward. What that means is it's automated. It's not sentiment. It's not I'm selling the stock, it's rubbish or anything like that. Same with accumulating shares via grant or reward. It's basically people are being incentivized. They're being given shares. It's not them with their hard-earned money going out and buying shares. But yeah, they're receiving shares. So it looks great when you look at that and go, wow, insiders are buying. They're basically rewarding themselves with shares. It's a kind of stock option. It's a kind of like a payment system. It incentivizes those to retain talent, if you like, to keep you in the company. We're giving you shares and so on and so forth. It's a very, very different signal from those just lining up to buy it without their own money. So you look at that and you think insiders are buying. You take a deeper look, a further understanding, and actually what you realize is it's just the company paying themselves in shares. It's okay, but it's not a sentiment of, wow, this is great. So just bear that in mind. All right. Okay, let's move on and let's go and look at all the numbers now. Before we do, you might consider tapping the like button and consider subscribing if you like this content. Let's go and look now at, what should we do first? The back test. All right, let's look at a back test. If we were comparing this to the S&P, very, very important. I always do that. If I'm going to buy anything, I want to compare it, right? So if we look at Longeveron, and we're going to go for that. That may be wrong. $10,000, and this is reinvesting the dividends with the S&P. You're now worth $259 since it IPO'd. Not very good at all, right? You're not happy with that. Whereas the S&P would have made you $10,000 is now worth $12,000. You've made some money in the period of time they've IPO'd, which is January 22. A couple of years. You can see the S&P here is in green. You can see Longeveron is in blue, and you can see how it's spiked but just faded away. So it doesn't compare to the S&P at all. So if you're using that as a guide, you wouldn't like it. All right, okay. We can see how the chart is very volatile. We're not going to go into that. If you want a full technical analysis of the chart, the buy zones, sell zones, join Sensei on Sunday. Every Sunday at 3 p.m. Central. I'll leave links below, and you can get the buy zones, sell zones with Sensei, and you might like that if you want to go from the and find the trading positions. All right, let's look at the analysis using Seeking Alpha. If you are watching this video right now, I don't know why I said that. I'll put this in the chat for you. Here is my Seeking Alpha. You can get a special deal right now, 25 off, and you can also get a free trial as well, which is a great deal, right? If you want to use my Seeking Alpha, this is where this comes from. Seeking Alpha analyst. I'm an analyst for Seeking Alpha. It doesn't mean anything. It just means I can provide analysis. It doesn't mean I'm a financial advisor. Just worth noting that, all right? But it's my opinion, and I am a Seeking Alpha analyst. No one's covered it yet. Wall Street, maybe I should. Anyway, Wall Street, it's a buy. Quant, which is their AI system, is a hold. So that's looking good. What about the valuation? We've gone from C plus to B to C minus. Not much movement there. Growth, A minus. That's moved up from D. That's good. Profitability is C minus, moved up from D. Momentum, C plus, moved up from F. And revisions, a B plus, down from A. So a reasonable factor grades there. It's a buy or a hold at least from that standpoint. Okay, let's have a look. As you can see, we just did the earnings a couple of days ago. And the revenue of 468,000 versus 217,000 in Q3. So revenue was up, but the overall was a miss. Okay, cash and cash equivalents and marketable securities as of June 30th, 24 were 12.4 million. The company believes its existing cash and cash equivalents will enable it to fund its operating expenses and capital expenditure and requirements through the fourth quarter of 2025. We'll look at their balance sheet in a minute and come to a conclusion of how well they are, how well they are placed. Let's look at their website. This is their website. Very biopharmaceutical. In fact, it blends perfectly with that. Look at that. You wouldn't even know it was the same, a different place, would you? Look at that. Beautiful. They probably use the same stock footage as me, if I'm honest. A lot of people use stock footage and we never know anything. It's just everyone shares the same images. Look at that. They're probably the same people I've got in my videos. Anyway, there you go. But what is interesting is if we go and look at their investor page. This is what they say to their investors. We are a clinical stage biotechnology company developing cellular therapies for aging-related and life-threatening conditions. Our lead investigational product is LOMECEL-B, which is derived from culture-expanded medicinal signaling cells, MSCs, that are sourced from bone marrow of young, healthy adult donors. We believe that by using same cells that promote tissue repair, organ maintenance, and immune system function, we can safely develop an effective therapy for some of the most difficult diseases and conditions associated with aging. I love it. I want some. Thank you very much. Latest news on the stock, they are to present at H.C. Wainwright 26th Annual Global Investment Conference. That was yesterday. You might want to go and check that out for some latest news. Now, I am going to share with you the most important part of the review, the numbers. Let's look at the numbers now. Is this a buy or sell for you? Well, let's look at the intrinsic value. We'll start off with that. The intrinsic value is overvalued. We value this stock at $1.03. Best case scenario, $1.13. It's still overvalued. Very, very expensive for what it returns. Okay. However, it's worth noting that this stock, just because of the way it's set up, does not doesn't use DCF valuation. Excuse me. I've got about a sneezing this morning, but there you go. It's a live show. What can you say? I apologize. Make all these videos live, right? Okay. That's what happens when you go live 12 hours a day. You got to do it all live. So this stock appears to be overvalued, but we do not have DCF valuation, so we cannot be accurate. So we need to take a further look at the balance sheet. Let's do that. Let's look into the financials. Now, the latest figures that we have, always worth mentioning, was June 24. This is their latest earnings. We've just got this in, up 26%. That is nice, all right? The revenue is up 26%. We do like that, and we're expecting to see it increase through next year. Okay, good. We know the income's up. Operating income, up 11%. Very good. Expecting that to slightly fall away, though. Net income is down 29% and expecting that to get marginally worse as well. Now, if you like what you're seeing now, this is my alpha spread. All of my members can get a free version of this or the premium plan like I'm using. Links will also be below, but I'm now posting it in the chat. There you go. You get a 10% discount as a member of mine. We've got our own page, as I know the CEO of this company, and I've got the best deal that anyone can give you. All right? Pretty good, right? Financing cash flow up 283%. We like that with no forecast. Investing cash flow up 32%, which is negative, and operating cash flow up 0.2%. Okay, let's have a closer look now at the balance sheet. This is important. 19.4 million. It's a very, very small company. 19.4 million assets, of which 12 million is cash. You know I don't like that. I don't like when there's just lots of cash sitting around. I'm buying a business that takes my cash, which is where they get money from, the investors, and turn it into assets, business related assets. If you're just holding cash, I can do that myself. Okay. Essentially, they're saying they've got 7 million of assets. 12 is just sitting in cash. We want cash. Cash is great, but I prefer cash working, not just sitting around doing nothing. I like to have cash, but not that amount of cash in comparison to their assets, because it doesn't show me what they're doing with the money, right? So far, I'm not liking this. It's a very, very risky stock anyway. Very, very risky sector. Very, very small. Cash sitting around is okay, but it's not really what I'm looking for. What about the debt situation? Well, we have no long-term debt and no short-term debt. So that's good. That's a plus. All right. If we look at the pie chart, you can see accounts payables 13%, other liabilities. There's no short or long-term debt here. So that's a positive. That means the balance sheet will be reasonable. It won't be amazing, but the balance sheet will be somewhat reasonable. If we scroll down, look at the margins. Now, this is important. Gross margin is 59%, all right? And that's improved. Operating margin has improved, but we're still losing money. Operating margin is down. Net margin has dropped off a bit, and again, losing money, negative 2,270%. FCF margin, negative. ROCE, is negative 127%. ROIC, negative 281%. If you want the definition of all these things, you can get it just by hovering over. Again, if you use my software, you can get a lot more information by diving in. I could be here for hours on one stock, all right? Okay, ROA down 153%. ROE down 213%. Let's move down to this analysis here. As you can see, profitability is 14%. They're not making any money. This doesn't get much lower than this, folks. I've got to be honest. 14% is pretty much as low as I've ever seen. I don't think I've ever seen anything lower than this, to be honest. This is very, very low. 14%, not good. But like I said, the balance sheet hides that a little bit and makes it look a bit better. The balance sheet, 61%, looks, the solvency score, like, they're not going to go bust. Like we've heard from themselves, they said they've got enough cash to get through to the end of 2025. They're okay. However, they haven't got much cash. They don't have any debt, but they're not making any money. It's very, very risky. I would be very, very concerned about this company. It looks better than it actually is. So I'm just saying the balance sheet looks better than it really is. Let's scroll down and look at what Wall Street give this. Now, this is where it gets interesting if you like the gamble, right? Worst case scenario. On the lowest side, we have a $9 stock, 275%. This is Wall Street's targets, right? Pretty good, right? 275%. What about on average? 379%. This, there's a lot of optimism here with the stock, obviously. We also have a 554% rally here as well. Very nice. These are Wall Street targets. Very, very good indeed. However, we've seen that they've been positioning. If you looked at the earnings earlier, they've been making these judgments and really missing. So they're not getting it right. However, in Q1 24, they exceeded expectation. They got it right there. So is there some light at the end of the tunnel for this company? Is there an outcome which could be profitable? I don't know. It's risky, but a lot of people like it. This is where it gets interesting. 28% short interest. This is what it's all about. A short squeeze. If we get some... Oh, hang on. What's this?
Rick McGrath donated $11.05 through a super chat. 10.00 for the ISRG review and 1.00 for Michael Bolton. Because I'm late, I added 5% interest for you. Rock on gesture. Cool face.
Absolutely brilliant. I love it. Thank you very much. That's funny. All right. Very, very good, Rick McGrath. That's. I'll give you that one. I'll write that down in a moment. 28%. So, short squeeze. Well, if we get 100%, remember the famous incident of GameStop, that was 100% short interest when it really popped. Over 20% is excessive. That's when you go into short squeeze territory. We're 28, so it's very, very high. But now we need volume. We don't have volume, but with good news, we could. So that's what Wall Street are betting on. All right, we've talked about the insiders selling and all the rest of it. There's no other news. No one's talking about it. This was 2 years ago on Yahoo Finance. So my reviews will appear here on Alpha Spread. They always do. This could trend on YouTube. It will be number one anyway because no one's covering it. So I'll be easy to be number one. So that's not a problem. This could trend up. So let's take that's our final thoughts on it. It's a very, very risky sector. It's an interesting sector. I like what they're trying to achieve. There is, I'm concerned about the balance sheet. It looks better than it is. We've got a lot of cash sitting around, which in comparison to their assets. No long-term debt, no short-term debt, so interest rates aren't going to benefit them other than they might now want to borrow money and they can borrow money cheaper, potentially going forward. That's a positive. The short interest is excessive. If we do get a lot of interest, if this video trends, it's such a small company, a lot of people like the idea of it. I'm not going to say it's a buy from me. It's very risky. However, a lot of Wall Street analysts like this with huge upside. Huge upside on it. I think it's one for further investigation. Let's see how it trends on YouTube. See if we get interest on it. We might get people become members for it who say, I want to provide some news in links for YouTube, on Discord. We can come back to it. Might get some more news come up in the near future. Get a bit of positivity, people buying in the stock, short squeeze. There's a potential here for a rally. Absolutely. There's a potential here for a rally and maybe a trading opportunity. I would recommend joining Sensei on Sunday for the technical chart show and asking Sensei. If you're a member, you can ask Sensei to do a chart on this. It might be interesting. It might be worth taking a look on that. All right, so I'll give you all the links for Alpha Spread, Seeking Alpha, Sensei show on Sunday. Also below in the description, I'll also post it to the comments as well, Sensei's show, and all of the links for Alpha Spread and Seeking Alpha. Over here, I shall put Alpha Spread playlist, all the videos, stocks I reviewed. I've reviewed over 200 stocks are here, and down here I'll create a playlist for Longeveron or Longeveron, I just don't know. All right, I shall post it down there, and as we get more content, if Sensei provides charts, there'll be more information down there. Okay, that's it from me. That's another review done. Until next time, as always, take care of yourselves and each other.